welcome back to another version of Mind Money Methods Market Scan. So it's been actually a while, and we've been doing these videos for free on pretty much a monthly basis. The last time we spoke was really around what happened with Brexit and all the chaos of Brexit and indecision of what's been going on and so on and so forth. So, there's been a few weeks since then, and the markets have somewhat stabilized in a sense. However, there's obviously always movement in the markets, and there's always things going on, which is fantastic, and gives us opportunity to either buy or to sell, depending on what we are trying to achieve when technically trading the financial markets. So if we start off by looking at the dollar index, we can see that for the past few weeks, if you want to call it, it came to a part of the 93 points 93 mark thereabout, and shot up quite a bit, almost to the 98, well, about the 97.5 mark, and has somewhat this last week or so dropped back down, and we've come back. So if we had to look at this in a technical, we were in an uptrend, we've come down, and where is the market going to go? Is it continuing to drop further, or we're going to go? That's what the daily chart, but obviously we need to always look at more than one chart in order to make an informed technical decision. And from a technical perspective, what I can see and have seen for a very long time, pretty much so for a good portion of this year, 2016, is that the dollar index has been in more of a range bound, if you want to call it. And I actually drew this out a long time ago, and I've kept it in there just to see how we've been going. And then really since around January of this year, we entered into this market, pulled up, and we've kind of been range bound within this between the 93 to the 98 mark. And that's where we are. So it's very much range bound market. What I would be looking to do is definitely looking to see I'm waiting to see a movement somewhere, something along this. If we actually draw this out over here, back down over here, we were in a similar sort of range bound market. If you look at the dollar index at this period of time here back in 2012, in fact, and it went on and went on and went on in this range bound market until 2014, so 2 years of going up and down within a range bound area. Eventually broke out, and we had a strong push all the way up to the 10,000 mark, which was a major mark that the dollar index had hit. And now we've been stagnating in around another range bound market. So how long is it? The question is really, how long is this going to go on for? How long are we going to be in this range bound market until we potentially break down or to the downside, potentially even coming all the way back down here, or potentially baking up and going and breaking new highs? So, I mean, that's what I would be looking at, and I have been looking at. But whilst we're in this range bound market, there are still opportunities for obviously to make money to the upside and then to the downside. So you're still going to find a bit of a trend within that range bound market, because there are some range bound markets we wouldn't simply trade whatsoever. But this is a big enough gap to make money to the long side or to the downside. But you've got to make sure that your technical analysis, your technical indicators, and your chart, multiple charts, are all in agreement in order for you to actually make that assessment. So that's important, and that's where what I've diagnosed and looked at on the dollar index. So I'm very wary where we are, and I would be very wary to place trades. But I do know we're in a range bound market, but I also know that there is the opportunity within that range mark, because how big it is, the gap between the top and the bottom and the top, in order for us to actually make some money. So if we had to go on and look at, say, for example, the New Zealand dollar to the US dollar, I mean, this is the Kiwi dollar has been strengthening against the US dollar. It's kind of hit an area here where it's not doing a heck of a lot. It's still in an uptrend. It's still strengthening, definitely against the US dollar. However, we've coming to an area now, especially if I go and also look at the monthly, we've got here, look at this candle. It's showing me that, there's a bit of indecision and something is going to happen. We're either going to go up or we're going to go down. But we need to look at our convergence, divergence, if there's any of that going on with our indicators and our price action. And we need to make sure that we are happy to see where we're going. But right now, there's a bit of, look at that. There's a bit of indecision, or if you want to call it, going on. It's not a clear trend in any way, shape, or form with the Kiwi dollar, although overall it has strengthened as against the US dollar. But for me, no trade right now with the Kiwi dollar, US dollar pair, US dollar, Japanese yen. Well, once again, the US dollar has been weakening quite substantially against the US dollar. The US dollar has been weakening against the Japanese yen. Real downtrend. There's no doubt about it. And we can see here there's been patterns, if you want to call it, although no pattern will ever be the same because the market is forever changing and forever moving. But if we look at this, we had a strong pull up area over here, and then it just fell. Now we've got an area over here, strong pull up, an area over here. It could just continue to fall again to the downside. Overall, if we look at this, we are definitely in a downtrend on the monthly, a downtrend on the weekly, and a downtrend on the daily chart. So our indicators are also confirming that we are in a downtrend. So overall, we are in a downtrend, although from any entry points into the market, I would be very wary of where we are right now. I mean, you could always put an entry into, if it broke these candles over here, put in an entry, for example, something to look at. I'm not saying that I'm going to do it, but it's definitely something to look at. An entry on about the mark over there with the stop about over there, and probably your first 1-to-1, 2-to-1, 3-to-1 as a potential trade in that market. And that's something which you could potentially look at, as long as your risk reward ratios, you want to at least try and get a 2-to-1. Once you've got a 1-to-1, you could always manage your trade and move it down, your stop loss, in order so that you're actually in free flow and in free profit. And then carrying on moving to the downside. So potentially there's a trade there. It's something I will be looking at. There's no doubt about it. But what has been keeping my eye out for quite the last month, and I've actually made some decent trades, is the commodities, as well as one currency pair, obviously being, for me, living in the UK, this is what I have been looking a lot at. And this has been, obviously, since Brexit, what's going on with the British pound to the US dollar, known as cable. Are we going to break this area over here, continue its free fall to the downside? So overall, we're still in a downtrend, although once again, we're in a period over here where you can see price is now in a kind of a range bound movement. But are we going to break down and break this low of this candle over here and continue to fall? Possibility, yes, very strong. I mean, it could be happening. At the end of the day, we still don't know what's happening with the leaving the UK out of Europe. There's no Article 50 that's been sent, and there's no clear plans right now. So I'll probably see price moving in and around this until the Article 50 has been made and until we know the exact plans. When Article 50 is probably pushed, you'll probably see the pound continue to fall further. So there's opportunities definitely to the downside for the pound, but it is in a bit of a range-bound area, and that's something to be conscious of and aware of. But the commodities is spot gold and mini spots, spot silver for me is, as well as oil, crude oil, there's a bit of opportunity going on. In fact, I've taken a beautiful trade for the last few weeks, months with gold and silver, and we've made some decent profits. It then broke into a bit of a range-bound area. Once again, seems to be a lot of this taking place on a lot of the charts, and we need to be aware of that. But at the same time, are we going to be technically, should I backtrack here? Technically, we've come up here, we've made a higher high, a higher low, and then a slightly higher high, higher low. So technically we are actually still, although it's a bit range boundy, we're still technically moving to the upside. So I'm very interested, and I have been, and this would have been a perfect entry, although not exactly in the moving averages, but it would have probably been a great entry even with touching over here, entry over here with a stop over here, and off we go. And let's see, price will probably push up to this area over here at the 2064 mark, and then we'll potentially either going to fall back, or it's going to come in here and use this as a level of support and push on upwards. Gold and silver for me over the long term is definitely very bullish, and I'm definitely going long on both spot mini gold and silver, and that is something which is keeping my eye out. So keep an eye out on the currencies, as well as keep an eye out on the commodities, being spot gold and spot silver. And then if you look at crude oil, well, it was obviously a very strong uptrend for quite a while, but we've had a definitely retraction, and we've gone a very strong pullback, which is expected in a way, because considering of where we were going and what was happening. But you know, keep an eye out on crude oil. It's another price, another commodity, should I say, that I'll be looking at to see what's going on with crude oil, and opportunities everywhere, folks. I mean, that's the thing, is the message is that there's always opportunity, as long as you technically understand what you're doing and understand fundamental analysis, which being a technical trader is somewhat have some importance, and that's only when there's massive big news announcements. Other than that, you know, for me, stick to the technicals, understand your technicals, and look out for opportunities, and manage your risk is a key factor. So that's it, folks, for this month's edition of the Mind Money Method trading, you know, free trading newsletter. And obviously, if you have any questions or anything that you would want to know, we do have on our our website, www.mindmoneymethod.com, we actually have a tab where you can come in and actually ask us questions, and leave a message, and we can always reply back to you. We do tend to get quite a few messages, some people asking about our courses, and some people asking us about some technical questions, which we're always happy to oblige with, as long as you don't try and take too much free time of our time. But we're happy to talk to you, there's no doubt about that. But there will come a point where obviously, you know, we want to work with you, and you would have to pay for a course, and then we can work with you. That's no problem at all. But happy to take some answers in the beginning from everyone. That's not a problem at all. And want to work with you to encourage you that, you know, to make trading, you can make it like a business, instead of like a hobby or somewhere where you just continuously lose money. There's definitely opportunity in the markets, and we are here to help you make that profit. So happy trading, everyone, and we'll hopefully speak to you soon, no doubt. Thank you. Have a good day. Happy trading.